Welcome back. Time for your business news now. We join Mike Eppel. And Mike, we're going to start with gas prices. As we saw from our Tammy Sutherland standing by live downtown, you warned us of this big jump, and sitting where now?
I am just the conduit of the warners.
Fine, but it's not good news.
Yeah, I saying, how much higher will they go? Well, unfortunately, I'm not Kreskin, and I can't necessarily predict the peak price of the pumps right now. But they did come up 10 cents overnight and expected to go up another, 6 cents, I think, tomorrow. As we're awaiting a decision out of OPEC this morning, where the cartel is talking about, cutting production upwards of 2 million barrels a day. Not one, but two. I think the idea here, by the sounds of things, is they want to get oil back up to about $100 a barrel U.S. Right now it's at 86. It's gone up $10 a barrel over the past week. And this has led to some extent, the price of the pumps going up. There's a bunch of other refinery issues at play here, too. And politics. It comes back to politics, unfortunately, because Russia is actually attending this OPEC meeting. Their deputy prime minister, I believe, is going to be in attendance. So the security scene in Vienna this morning is on high alert for that. The Russians might try to flood the market. There's some talk about that before more sanctions kick in. So OPEC is maybe trying to offset that with a production cutback right now. And then you've got U.S. politics, Melanie, in this, because this is the last thing the Democrats want to see going into the midterm elections, with the price at the pumps in the U.S. going up after they had dropped for something like 100 days in a row. And there was some relief that, drivers were getting a little bit of a break. But now if the cost of living continues to climb, tied to energy prices, that's another mess we could see in the United States. And let's not forget, the energy companies, their profit margins are going to be quite large here. They already have been at massive, almost record-breaking levels in the first half of this year, Melanie. So they're raking it in, too. Oh, and governments. As prices go up at the pumps, it's the tax on the tax on the tax.
That's right.
A lot of winners other than drivers.
Yes. Okay, let's talk real estate, shall we, Mike? New report out. We're looking at the numbers.
By the way.
Okay, so I didn't want to say anything.
It's just a mess.
It's just a little. Wait, hold on. I got it.
Yeah, thanks. I got a cowlick going on or something here.
There we go.
It's not the Superman curl or anything. I wish I had that.
Always good. Don't worry, Mike. You look great.
No, I don't.
Real estate. Happy Apple is not here today. We're going to bring back Happy Apple. I like Happy Apple. Back to real estate prices. Okay,
yes,
seeing the decline as we've seen across the greater Toronto area.
Yeah, down again in September. And the price we're seeing on the average, again, you look at market by market, of course, it's about location. But across the city, prices have dropped back to where they were in, I think, October last year, according to the Toronto Regional Real Estate Board, and down 17% from the February peak. What happened in March? Oh, yeah, that was when the Bank of Canada started raising interest rates. So we've seen the direct correlation, Melanie. As interest rates have gone up, prices have come down. And new listings last month dropped 44%. There were just 5,000 homes sold, but new listings dropped the most in something like 20 years. So that indicates buyers are moving to the sidelines. They don't want to buy right now because our price is going to fall further. And sellers are going, I don't want to sell because I don't know what price I'm going to get. So here we are in Stagnantville.
I don't like living here. It's not a fun place.
No, it's not.
No.
It's not.
Okay. What is happening, the very latest with Elon Musk and Twitter? On again, off again, on again, now, on again?
Yep, he's buying it. He's buying it. Because he was going to be going to court to try to get out of the deal. And as soon as the lawyers kind of went, you know what, you're probably going to lose. You can't just not buy something you said you were going to buy. He said, okay, maybe I grudgingly accept. And so he's tweeting out, and there's dancing again. Anyway, the tweet that he sent out overnight was something about App X, just a vague thing, but it sounds like he wants to make Twitter into much more than what it currently is. WeChat, for example, out of China has like banking and all sorts of other things you can do other than just talk about, spout off about politics on social media. So that could be the background of this. Twitter's stock jumped 22% yesterday, so it did have some pretty impressive market implications.